Hi guys, good evening. Right now it's about 8 minutes past 5, and I'm your host, Dr. Seema Jain. I'm a SEBI-registered research analyst and chief mentor at StockPro, partner with Zerodha, Upstox, Fires, and Aesthetic. So today I thought, let's begin with a new series, something new to learn. And I'm starting with option buying versus option selling. I'm going to grow this into, slowly, gradually into a series whereby I can explain you some important concept of option selling, but definitely some concept, right? Not all the concept, but some I will definitely share. And also, I will like to give you the confidence that if you want to generate constant income, the good income every month, you want to have a salary to be earned from the stock market, then this is the only way, right? By option writing, by option selling. But how do you do it? Like all the pros and cons and everything I'm going to be discussing slowly, gradually. So let's go to the content right away and talk about what lies ahead. So if you want to reach out to my team, right, in any which way, you can contact my team through the Telegram, website, Facebook, Twitter, WhatsApp, mobile phone, or whichever way you want, right? Then, you know, all of you, before I go on to the call and put, I'm understanding that you all know what is call, what is put, right? So call is basically an instrument, or it's kind of a, before I go on to any of this, I would like to ask you people, please keep writing in the comment box, because I want a two-way communication. Tell me, why do we really, what do you really mean by call and what do you really mean by put? When do you buy call, when do you buy put, right? So if you understand, when you buy call is bought when market is bullish, right? And similarly, put is bought when the market is bearish, right? So uh, basically, if you want to understand, call and put both are hedging instruments. They are not supposed to be traded naked without their futures or their cash instrument along with it. They're not supposed to be treated like that. But what we do, because we all have limited amount of money and various other reasons, we buy call, we buy put, and eventually we lose money. In the comment box, please write how many of you have made money by buying call or by buying put, right? Until you are sure about the direction, please don't buy call and put, right? They are hedging instruments, right? They are hedging instruments to create contrapositions, right? Suppose you expect, suppose you are holding this any stock. Let me say, take a TCS. Let's say I've bought TCS and TCS is going up, up, up. As long as it's going up, I have no issues. But at some point, TCS may also have some correction. I don't want to exit the stock that I have bought, right? And I don't want to lose out when it comes down. So what do? I will hedge my positions. I'll create a contra trade by, option selling, right? What will I do at this point? I will sell the options or I will buy the put. Either way, it's possible, right? But what is important thing, there has to be, you have to be holding the underlying instrument. That's the rule. But usually what happens, what we want to do, we want to buy naked call or naked put, right? That's not absolutely correct until you really know about the trend. Now, something very important that I want to explain you, the concept of money is very, very clear. If you want to buy, the best investment for newcomers is equity, right? You invest in equity because if you have 100 rupees, you'll be able to buy equity worth 100 rupees only, right? 100% investment. If you understand the market a little bit more, you can buy futures, right? Again, futures have to be hedged. And if you are further skilled, then you can buy options, right? But something that you have to remember, that equity wants 100%, right, of your margin, right? Whereas futures need about, I think, 30% of the margin, right? And options are very, very cheap. They're basically hedging instruments, right? So you can say that you can get it as cheap as about, what do you say, 10% or maybe less, 5% of the like the amount. Suppose you want to buy TCS 300 shares, whatever you require here, You will just have to pay 5% to have the options. Now the question comes, if equity is 100%, futures is 30%, options is 5%. Please remember, money is inversely proportional to the investment, right? If you invest 100% money, your losses will be almost negligible, right? If you have invested at the correct price. Futures losses will be higher, right? Because you're spending lesser amount, you're investing lesser amount of money. And options, you will be more vulnerable, right? Your probability of losing this money is going to be higher, right? Always remember the rule that I've told you, that money is always, the profit in the market is always proportional to the investment that you're doing. If you're spending more money, remember your probability of winning the trades will be higher. If you are investing lesser money, your probability of profit will be way lesser, right? So now comes the question about, why do people buy options, right? Or they buy options because definitely everybody want to multiply money, right? They want small investment and big returns. And in the bargain, what happens? They lose all the money. So please write in the comment box, have you lost money? Have you lost money in, these, just give me a second. So have you lost money in buying options? If it is so, please write it in the comment box. Have you ever thought, if so many people lose money, then who gets the money, right? Have you ever thought about it? If out of 100 people, 95 people lose money, then who gets the money? It's the option seller, right? So every time in the market, there are 4 possibilities. If you have a bullish view, you can buy call or you can sell put, right? Earning money here will be difficult. Earning money here will be little easier. And it's a different feeling, right? If you start selling option, it will be a different feeling. I would say the more of it will become a fearless trading, right? Then the bearish view. Suppose you think that the stock is about to fall, then you can buy put or you can sell call, right? This will be a bit more risky, but this is going to be less rewarding but more certain. So please remember, the probability of profitable trades increases if you invest more. If you invest less, probability of losing trades is higher, right? So keep these points in mind. So if you want to be earning regular money, if you want to make consistent money, right, please write in the comment box, what is a comfortable money? How much money would you like to earn every? Then I'll tell you how much amount is needed, right, to make that kind of money every month, right? Please write in the comment box, what is it that you're looking for? How much money, if you get, you'll be comfortable, right? So first aim should be to be able to replace the salary. So think about, how can you replace your salary, right? And write down your, if I get this money, I'll be fine. So if you will write that in the comment box, I'll tell you how much money will be required, right? Roughly it's to the tune of about 10%. So if you are having 5 lakh rupees, you can easily get 50,000-60,000 rupees. If you, I don't think so, less than 1 lakh will really help us. You should minimum have about 2 lakh rupees if you want to do the option selling. And once you contact us, or maybe when I conduct some webinar, I'll tell you how do you get. You don't have to get this extra money from anywhere. You just need to collect money slowly, gradually, with your own, keep investing in good bluest of the blue chip stocks, so that your money is safe, but at the right time, and keep developing your portfolio and bring it to the point where it is about 1 lakh, 2 lakh rupees. Once you have it 2 lakh rupees, you can pledge it, right? When you pledge it, you will be able to get about 80 to 85%, because if you are doing it in the bluest of the blue chip companies like TCS, HDFC Bank, all these are very like large caps, and they are blue chip companies and Nifty 50 companies, you will get about 80 to 85% margin in your account. So what is the benefit you will get? The stocks that you have bought will get your return, and what will happen? The margin that you get, you can generate money from that. So if you're already having a portfolio which is above 2.5 lakh rupees or 3 lakh rupees, you can easily get another 20-30,000 rupees, right? But how? We are planning to do a special course for option selling only. So if you are interested, you please write in the comment box. You can just contact my team. They will be able to help you. So now, so as I told you, most of the people, if their view is bullish, they will buy call, right? Whereas option seller will sell the put, right? And similarly, if your view is bearish, you will always buy put with the option seller because you want it to be 100% certain. And even if you must have noticed, even when the stock goes up, right, the put value, the call value, they will not increase, even if you've taken a view, right? So that's an important point. So I want to take you to the next slide. And so here we go. Now, what can we do? We can long options, we can long and short positions, right? We can have both, right? We can buy call, we can sell call. When we buy call, when we buy call, it's called a debit, right? When you buy call or put or any option, it's called a debit strategy, right? You pay the premium, right? Whereas when you are selling the options, when you are selling call option or the put option, you receive the premium. So a buyer gives the premium, seller receives the premium, right? And buyer has a right to exercise, and option seller has a right obligation to settle it. Risk is limited, right? Suppose you buy an option for 10 rupees and the lot size is, let's say, 100,000. Your risk is only 10,000 rupees, right? How much is your risk? Only 10,000 rupees. But if you sell options, your risk is unlimited, right? Suppose option goes opposite to your direction, then what will happen in that case? The risk will become unlimited. So a very important rule here: never have options which are naked options, right? When you sell options, you have to have a protection, right? What protection, what strike price, where do you sell? All that is what we cover in our course. So in the option buying, you have unlimited reward, right? If option goes up, the price just fires up, right? But similarly, the reward received will be limited when you sell the option. So as I told you, in stock market, always your profitability is inversely proportional. So if you're selling options, that means your investment is higher and your probability of winning the games is going to be higher. Then similarly, if your investment is low, the probability of winning the trade or winning the options will be very less. A very important point is that it requires small money. Buying option requires, which is debit strategy, it requires small amount of money, whereas option selling requires huge money, right? As I told you, that the profits are always inversely proportional. So if you buy options, right, if you buy options, you have to pay lesser amount of money, right? But when you buy when you sell options, you have to pay huge amount of money, right? So your profitability, the probability of your profitability increases, right? That's an important point to remember. So we all want, you know, I'm 100% sure all of us who have bought options sometime or the other, we have lost, right? So again, I'm reiterating the same thing. Option writing, basically, what are the advantages of option writing and what are the disadvantages of option writing, right? So I'm going to just oh, sorry, just give me a second. So I'll start from here. So option writing, what are the advantages? When you write options, you receive the premium, right? Time decay favors, like slowly, gradually, the option will decay as the time will pass by, and you will get the advantage of that, right? If market does something, market doesn't do anything, either way you will get the advantage. Should be done when volatility is very high, or should be done when the volatility is very high, right? because volatility is also can be equated to the air, right? Air in a bubble, right? So when every time the volatility goes up, it has to cool down, right? There's no other way, but the volatility has to come down. It has to subside, right? So always volatility, when it is high, you have to sell the options. But how do you find that? I can tell you about Nifty, right? Nifty is basically, you can get it from the VIX, India VIX. But other for the normal stocks, you need to figure out. There are ways and means to find out that. And option writing disadvantages, that maximum risk is unlimited, right? If without insurance, right? This is a point to be noted. If without insurance, your risk is going to be unlimited. Maximum profit is limited, and which is equal to the premium received, and big margins are required. So this is very clear difference between option buying and option selling, right? So you have to take a call. What do you want to do? But if you really want, right, you don't want to rack your brain every single day to filter out a stock and then whether it's going up or down, and you want a regular income, right? You want that. It's like salary, right? Your stock market trading should be like your salary, right? Every month you go to the work, do some work, come back, right? Every month, end of the day, every month at 30th or 1st, you get the salary. So option selling is like that. You get rewarded after some time, right? It's not tomorrow. I mean, the way I trade sometime, I get return even the next day, huge return the next way, because I apply technicals. But I'm telling people who do not know technicals, they can also make money, right? One simple technique I'll tell you, but I'm going to elaborate upon this slowly, gradually. So here we are. Pick up any stock and you have to keep a day time frame, right? Whenever RSI goes above 60, just sell the put option, right? You get it. When RSI goes above 60 means the stock is bullish. 1 day time frame, please note that. You're going to sell the call. Similarly, if RSI comes below 60, sell the call option. It will be bearish. And you can sell option anytime. Suppose you see option here, you see the RSI in this zone doing nothing, right? Even the stock is doing nothing. You can sell call and put both, right? You can sell call and put both. And in this duration, sell both. You want to check what happened. Mindtree, it's at 800, 900, 940 call, and 850 or 840 put we will sell, right? Which duration? May, starting from April end to May and June, right? Let's see what happened in let me just write it here so that you can all go back and check. So we're checking Mindtree, right? Mindtree from what duration? April end to June end. And what strike price? We're going to sell call of 940 and sell put of 840, right? Let's see what happened. So let's go here, equity market, and go back here. Go to the product, right? Go to the, sorry, go to the product, go to equity derivative, right? And go to the historical data and go to search. And here you want to put it, I want to look for stock options. What is the symbol? Mindtree. Mindtree. Year is 2020. So you should know exactly what is happening. Expiry is May end. We can take May end or we can take June end, right? We can take May and June and we can take, and selection call option, and we're going to take this, select the period starting from 1/4 instead of 1/4. I'll take 1st May. Let's say we start from 1st May 2020 to June end, right? and 2020. This is here. Let's see what happened to the option. Started from this price. Take a second. Have I taken the right value? Oh, I haven't taken the strike price here. 940. Now it's perfect, right? 97 it started, and end of the month it, like after the tenure, like we started this trade in the beginning of the May, 97 points became 7 points. We could have exited at 10 points, we could have exited anywhere we wanted, right? But nowhere you can see it ever went above 97, right? So that's the beauty of option writing. Then let's see what happened to the put. So we decided about 840 put. Let's get the data for the same period. Hope it exists. Yeah. So see, from we started from 74 and look at where it ended up, right? So both ways, whether you look at the call, whether you look at the put, if the market is doing nothing, both will expire worthless, right? That is an important point to know. So much money to be made. Sell both of it. 74, and if I take the call and we take 940, we get the data, and almost like another 80 point, 150 point, right? What is the lot size? What's the lot size of Mindtree? Mindtree lot size is 800. 150 into 800. You can just calculate, right? 1,20,000. That's the amount of money you can generate. But of course, you need to identify the correct trade, correct strike price. Then you have to use the protection. You have to use the in-stock, and you need to know that it's going to remain range bound, right? It could have blasted also, right? Then your either the call will become unlimited loss or the put will become unlimited loss. So you need to know which call or which put will be sold, right? So those are important aspects. And I think what I believe personally, that people probably do not have the courage to sell the options. Do you think like that? आपको ऐसा लगता है? Do you think I'm going to make the same video in Hindi as well? But do you feel like this, that you don't have courage to you don't have the courage to sell the options? So please become courageous, and trust me, you will make more money than you have been ever making if you do the option selling. And it's almost like 10 to 15% return every month. And if you just do the cumulative uh, cumulative, if you just calculate it, you will find that it goes above almost 150% a year, right? So please think about it, slowly, gradually you have to take a call and become a good option seller. So with this, I'm signing off. In case you want to be, oh, I'm 100% sure you're present on my Telegram channel, right? I am 100% sure you are present on my Telegram channel, right? Just a sec, let me open it. So this is my Telegram channel, and we have given one single trade today, just one single trade today. This my profit screenshot. 𝐿, right? We have only given 𝐿. That's the only FNO stock we have given. We don't give 3, 4, 5, just one stock we give. In case it hits the stop loss, we give the other stock. So 𝐿 is what I have given, and look at the beautiful movement that 𝐿 had, right? It just continuously kept on going up, straight up. That was the flight 𝐿 had. Beautiful flight. It moved almost like this is how 𝐿 moved up. Beautiful trade. So all the best. Take care. And in case you need to reach out to my team, this is the way you can. Bye bye. Take care. Remain connected, and please write in the comment box everything that you want to know. Maybe why you want to do option selling, option buying, or do you want to make a consistent income? Anything that you want to share, please feel free and tell me. Like, I'll grow this series, right? So I need to get your inputs. What is it exactly that you're looking for? Take care. Bye bye. See you in the next video tomorrow on the same concept, option buying versus option selling. Bye bye. Take